Hey, you guys, how you guys doing? Welcome. I did not go live on Wednesday, so I'm going live today. So welcome to Fearless Friday. Yay. So basically today we're going to finish up our conversation about business. So I do have some slides for you guys to look at in regards to business. So I'm going to go ahead and start to share my screen because this is going to be a quick live. Also, for those of you who do not know, I have written a book and it's called Fearless Warrior. It is available for purchase on cajdapparelmore.com. The workbook is also available for purchase, and there's also the Fearless journal that is available for purchase as well. So today is Fearless Friday, and we're just going to be talking about business. We're going to finish our conversation on business right now. So I'm going to go ahead and share my screen. And today we're going to be talking about a couple of things. So the first slide, couple of slides I have is the first one is effective financial management. So we're going to talk about that. So I'm going to share my screen with you guys. So let me get the screen ready to be shared. And then we're going to get into this goodness. Okay, so you guys can see my screen? Yes, you can. All right, so we're talking about the importance of the effect of financial management. I have so many up. The effect of financial management. So there are three major legal forms of business, right? So we have the sole proprietorship, which is ownership owned by a single individual who is responsible for the company's debts. There is no separation of entity when it comes to business and personal assets. The sole proprietor can lose business assets as well as personal assets if sued. Now, listen, I know a lot of people are doing the sole proprietorship, but that is not something that I would suggest. The reason being is say you selling for me, I sell jewelry, right? So let's say if I'm selling jewelry and it happens to turn somebody, we pray this never happens, but it turns a color or it does something and somebody is displeased with it or whatever it may be. Somebody may be allergic, whatever it may be. And so they get to a point where they say, well, I'm just going to sue her. If I have sole proprietorship, guess what happens? They can sue me for my house, my car, my personal assets. So this is why I don't think that this is a good idea to do, but just want to give you guys the information behind it. The next one that we have is partnership. There are two types of partnership, general and limited. Partnership is a business with two or more people who come together as owners, similarly to co-sign a car, like when you co-sign on a car, it's like a joint, right? So both of you guys are like joint owners. So there is also no separation of finances. So if the business gets sued, so does the personal assets. So this is another one that I don't suggest. So in a sole proprietorship or partnership legal structure, the law does not consider the owner of the business or the partners as a separate legal entity. So guess what? The same thing applies. If you get sued, they're going to sue you for your money. Okay, limited partnership shares can be transferred to another owner without the need to diffuse the partnership. And what that necessarily means is that if I am working with you in your business and I just decide it's not working, I can pull out and there will be no consequences, no circumstances. Sometimes in certain type of partnerships, when you do business, there are things that has to be paid off or there are laws that have to be done before you can move on. But with this, there is none. So you want to be careful with that one as well. The next one is corporation. Functions separately from the owners. A corporation can individually be sued and can purchase, sell, or own property. So a corporation can be sued, but not for your personal assets. So this is sometimes why people do this. This is why some people, they do corporations. With a corporation, you have stakeholders. Stakeholders pay taxes on profits received. You don't have to worry about your personal assets being touched. So that is a good thing. Now, this one right here, LLC. This is what I am. Both of my businesses are LLCs. CAJD Apparel and More is an LLC, and so is Charise Richardson McGriff Coaching. It is also an LLC. The reason being is because if someone was to sue me, they can sue the business and not me because of if something was to happen, they cannot sue me for my personal assets, right? So just like the corporation, there's a separation between personal assets. If the owner gets sued, they only will lose what they invested. You can have unlimited members and owners. The drawback is if your profits and business operate like a corporation, then you will get taxed like one. So there are sometimes, there are a lot of businesses that have LLCs, but the only thing is the bigger you get with your LLC and you have different, if you're functioning like a corporation, then you will get taxed as a corporation, right? So the next thing is you can have board of directors when you have a LLC and also when you have a corporation. So usually the board of directors goes as follows: CEO, chief executive officer, a vice president of marketing, or just a vice president in general. Or you can have, I've seen some structure where they have a CEO, then they have a president, then they have a vice president, which means that the president is like a 50% owner. You have vice president, then you have a marketing department, or you have the director of marketing. I've heard that. You have the chief financial officer, which is the CFO, and they're responsible for all the financial planning. So usually the CFO is responsible for the accounting department and anything that has to do with money, right? For businesses, and if you think of things where you have worked at or previously done things. For me, my business where I've worked at before, there was a CEO, there was a president, a vice president, there was a director of marketing, a director of operations, and then there was a CFO, or either they also can call them. I want to say it's I can't remember the name of the other one because it's a CFO, but it's something else if they're not called CFO. So responsible for all financial planning, and then they have the vice president or director of operations, right? So that would be your board. So that is the end of that one. So I'm going to stop sharing this one, and then we're going to get into the next one because there's another one after this one. And let me see. Stop share. Hey, y'all. All right. And so we're going to share another screen. And this one is called The Importance of Financial Statements, because this is just our business stuff that just to finish out our month, right? So the importance of financial statements. And the thing about this stuff is, y'all, I didn't really even realize how important this stuff is in your business. A lot of people don't want to listen to stuff like this, but this is for real. If you're trying to grow and you're trying to expand your business, you really need to know about these financial statements. You need to know about business, period. You need to know the difference. A lot of us don't succeed in business because we don't even sit down long enough to find out what the difference is. So if you're not going to sit and understand, this might not be, this is more of a teaching live more so than anything else. But in regards to that, if you're asking God to bless you with so much and give you all these things, you have to learn. You have to know what it is you're trying to do, what you're trying to accomplish. So if you know how to do these different things, because when you're a small business at first, you might not be able to afford to pay nobody to do this for you. So if you can't afford to have an accounting, or you can't afford to have these people do these different tasks for you, you got to learn for yourself. And so these are things that I have learned along the way of doing business. And this has helped me to be able to learn and to grow, so that when I do blow up and I do get all these customers and get all these things, I have things set in place. Like, I'm okay, I have spreadsheets, I have this, I have an income statement, a balance sheet, a cash flow statement. I know what to do. I know how to calculate these things until I get someone to do this for me. So this is very important, you guys. And I know it's a lot of teaching, it's a lot of talking, but at the same time, I hope that you learn something. So now we're talking about the importance of financial statements. So the income statement, the balance sheet, and the cash flow statement. So quantify impact, compare the trend. Managers should be able to interpret financial statements to track the impact of the company's bottom line. Looking at the income statement will let the manager know what trends in producing where in your company could be taking a direct hit quarterly or annually for a specific period of time. If you have purchased a set of clothing and spent money on social media ads, you are looking for this product to make you $1,000. So like for me, just say if I come up with a shirt of the month, because that's what I'm doing now, coming up with shirts for the month. My shirt for this month was Preach Sis, right? So just say if I made that shirt and I said, I need this shirt to make me at least $1,000 this month. So this will help. These statements will help me know what trends are making me the most money. So just say if I put the shirt out for the month, but that's not the shirt that hit, it could be another shirt that hit for the month. That's fine. But if I spent social media ads on that particular shirt, then that's a problem because it did not do what I needed it to do. And for me to know how much I need these financial statements to be able to tell me what it's doing what at the right time. So The income statement will show if the trend was successful or if you need to focus on another trend. So you need an income statement to be able to tell you how much money you're taking in, what's going on with your business, and what trends are doing what, so you know if you need to refocus, right? The next thing, it helps you decide on budgets. So budgeting is the roadmap to success. So a lot of things that I've been able to do in my business, it has been through savings. I am a big person on saving. You know, I like nice things, don't get me wrong, I do. I like to keep my hair done, I like to do these things, but I learned how to do my own hair. Look, it's certain things that you have to learn how to do on your own if you're trying to be successful. I learned how to do my kids' hair. I learned how to do my own hair. So right now, I am the hairdresser of the house because, right, what? We have to budget. There's things that we have to do to make sure that we get to our next. So budgeting is the roadmap to success. Budgeting is especially important for a business. Financial statements can be used to help you create a vision as well as budget for your business. It is like a roadmap that will lead you to success. Listen, I had to come to the conclusion because one day I was looking at Facebook ads and I was like, man, these Facebook ads, you know, they can be expensive, and they can be. But if you think about how much money you spend out to eat on food, sometimes just going to McDonald's or going to Burger King or wherever your favorite places that you like to eat, guess what? You've already spent that money anyway. So you take that same money that you spent on stuff that really doesn't really make a difference. It could be other things that you spend money on. It could be makeup, it could be clothes or whatever. But if you take that same money that you're spending this stuff on and you go invest in that same money in some ads for your business, then you get more customers, right? So that's what we want to do. These statements also help you cut costs. So do we really need this service? So where your money goes is important. If you can cut costs, it will allow you to apply those funds more efficiently. Maybe you have been paying for a marketing structure and you just realize that you have this same service in another plan that your company has been using, but you just found out that this is something you have always had access to. So I'll say for me, I have GoDaddy as my service for my domain name, for my website, for all of my websites, I go through GoDaddy, right? Even my WordPress is through GoDaddy. So the thing about it is, I didn't even know that I had marketing already programmed into what I was already paying once a month. So I pay a certain fee once a month, and all in that is email marketing. It's all these different things where you can make flyers, you can do so much different stuff. And I was paying on another structure to make these flyers and do these different things and send out emails when what I was already paying for already did it. So what I realized is that I was wasting those $24 a month. So then what I did was I turned around and I flipped that into ads. So I'm still paying out $24, but I'm making that $24 useful now into another situation. And the thing about it, $24 for 5 days of marketing can get you 10 more customers, or it can get you 20 more customers. It can get you even more than that. So those same $24 that I spent on nothing, I turned around and made it available for something. So that is the thing of cutting costs and finding out where your money is going and how it's going to make you money, right? So you can take that money and put it into ads and advertising. And that's just what I did. The next thing is company incentives. So for me, I want to be a much bigger company than what I am now. I want to get to a place where I'm not actually doing any, as far as in the business, I'm not doing anything in it at all. I want to be able to hire employees and pay them a very nice salary to be able to run the business for me. So with that being said, with you having these different, these statements, you can have company incentives. Who doesn't want extra money? You can do like game nights for your team. You can do money incentives. You can give out gas cards, gift cards, all kind of different things. It will motivate your team by offering bonuses and gift cards. If you find out where you are spending excess money, you can then reward your team for a good job. So you can find out where you're spending money at, and then you can turn around and you can spend that money in your company with your employees, which is good to be a good employer, right? This will make the workplace more enjoying and give your employees some extra fuel. Listen, I know one thing for me when I used to work for a company was that, if they ever gave me incentives, a mug or something, that was nice. But an incentive like a gas card or, game nights or different things like that, or things where we can win prizes and stuff like that. That kind of stuff made it worth it for me. So that's the kind of stuff that I want to do when I eventually grow into this big company that is coming soon. Amen. So limitations. Keep a clean record of inventory and sales, or your calculations will be incorrect. Listen, the thing about all of these statements is that you do have to be in a place where you are, you have your calculations correct. As far as how much money you spend out, you have to keep inventory, spreadsheets, Excel. They also have other programs that works best with this, that will help you to keep your things in order. So only shows historical information because it's based on historical information. And as your business grows, you will have to change your accounting practices. And listen, right now, like I said, you might be doing this by yourself, but later on, it may get to a place where you have to hire people to do this for you. And if that's what you need to do, that's fine. And actually, that's great, right? Because that's what we're trying to get at. We're trying to get to a place where we have it, where we expand enough, where we have enough money to pay people to do stuff for us. So later on, your accounting practices will need to change. Okay, so that is it for that one. I have another slide for you guys, and then we're going to be wrapping up. But I hope this is helping somebody, because this is something that I found out after being in my business. Like, I was in my business for so long and trying to figure out why this is not working and why this is not working. But sometimes it's not working because of the fact we don't know how to work it. Sometimes, even with my business, I was an LLC for a long time, but never knew anything about these financial statements, never knew anything about how to do these different things. But when you start reading and understanding, and you let me look this stuff up, because there got to be something to this, then what happens is you get to a place where you're able to expand and you're able to grow. And not only that, you're able to show people. And that's one thing I love. I love teaching and showing people how to do this, because I think that is so important. So we have one more slide, and this is called nonprofit decision making. And so this is for nonprofits. There are people who want to do nonprofit organizations, whether it's feed the poor, whether it's, provide shoes for people, whether it's do something, even have a church, whatever it may be. So nonprofit financial statements are also important. And the nonprofit financial statements are similar to a business structure, but they are some different things. So just going to go through this with you. So the first one is the statement of financial position. This is similar to a balance sheet, right? So it provides an overview of entities' finances at a given point. When a person donates to a nonprofit, there are guidelines for spending the money. List that values of all the assets held by the organization and the values of all the debts owed. So the statement of financial position is similar to a balance sheet. It shows everything. It shows the assets. It shows the current cash. It shows the short-term investments. It shows all of those things, right? The next one is the statement of activities, which is similar to an income statement. So these things are similar, but they're just called something different. And it focuses on the total organization opposed to focusing on funds within the association. The expenses that are usually reported are major programs and doesn't show profit or loss, but rather shows positive or negative change in each asset fund. So this is something that is very important for a business. Like we talked about the income statement, it's the same thing, but it's just called a statement of activities for a nonprofit. But why are these things important? Because you see where your money's going, you see how much money you're spending where, and you see where you need to improve. And this is something that we all need to know. The next one is a cash flow statement, and this keep counts of all the cash flow going in and out the organization. Now, this is something that I really did terrible with, and I still need to work on. I'm not even gonna lie. I need to work on it because of the fact that if you do not know this, you don't know how much money you're really making. And sometimes when you're running a business and you have a job, and you have a 9 to 5, you don't realize how much money you actually spend on your business, because most of the time you don't separate the two. And if you do separate it, you're still using your money from your job to fund your LLC or your business, right? So with that being said, because you're doing that, you don't keep count of how much money you're spending. I know for a while I didn't. And so I know it's some other people that don't as well. So with that being said, we have to get to a place where we start to separate those funds so we know the difference between how much money you actually making, because you'll be surprised when you think you're making this and you do your money and your totals and you find out you're not really making what you thought, because you got to think of all your overhead costs. You got to think of your depreciation, like, you know, your machines. Like, I have a heat press, I have a mug heat press, I have my machine that does my vinyl. You know, I have cutters to cut my stuff, to cut my vinyls for me. I have all these different things. All that stuff is going to depreciate after a while. And guess what? I'm going to have to buy it again. So you have to add in what, you know, the money that you're using, your time. It's so much that we have to add in that we don't add into these cash flow statements of how much money we're making and how much money is going out, because we don't pay that attention. But we have to in order to become that big company that we want to become. So it shows the entry loss within the organization. This statement often gets confused with the profit and loss statement. And then the next one and the last one actually is the statement of functional expenses. And this statement of functional expenses is referred to as a matrix because it requires organizations to report their expenses by both functional and natural classification. It is also connected to the statement of activities because of the total expenses. So listen, basically all of these are statements that you can use for a nonprofit. And before we talked about statements that you can use for a for-profit. And so all of these statements are very important in your business. I hope you guys have enjoyed Business 101. I have really enjoyed it. I am very, very glad and very faithful to it. And I'm glad that you guys have been on this ride with me. So I will see you guys next week. I'm going to do my lives on Fridays for a while, just schedule problems that we have, but it's okay. We're still going to go live. So instead of going live on Wednesday, we'll be going live on Friday. And you guys, I do have a YouTube channel, which is under confidence coaching. If you could please go on there and also like that page, that would be awesome, or subscribe to that page. And that's all I have for you guys this week. Thank you so much for joining and have a wonderful weekend. Bye.